And in this week's Global Economic Week ahead, all eyes are on key U.S. data releases after the recent stall caused by the government shutdown. Investors are also watching the October Fed meeting minutes for any signals on future monetary policy, while inflation and retail sales figures from the UK and here at home are highly anticipated. Joining us to unpack that and what's ahead is Joshua Mahony, Chief Market Analyst at Scope Markets. Joshua, thanks so much for your time today. Now, the MPC meets for the last time this year, and economists seem split on the SARB's stance. What do you expect out of the MPC this coming Thursday?
I think we've already got through a year where the expectation from the South African bank was for 2 cuts. We've seen 3 already, so there's a question mark of whether we're going to see a 4th. I think it's quite likely that they hold off this time, but ultimately they do have the basis to be able to move further. Yeah. Certainly we've gone through a period where people are feeling a lot more confident about the economy, but we've seen that the lowering of that threshold within which they can operate in terms of inflation. So I guess the question mark is, how many more rate cuts can they do before they start to stoke inflation and start to put that boundary back into play once again?
And talking about that new inflation target that sits at 3%, everyone is saying it's, short-term pain for long-term gains. And ahead of that MPC meeting, we do have economic prints, consumer prices, as well as retail sales figures coming out. But let's talk about consumer prices in particular, especially considering the new inflation target regime. What are your expectations on that front? We've seen slower price increases when it comes to fuel on the back of downbeat oil prices and a stronger rand, but there's been some volatility on the food side.
Yeah, so markets are expecting a continuation of that downtrend, a move down to 3.4% on the year-on-year figure. Certainly that essentially plays into the idea that we're seeing normalized rates of inflation, so that really accounts for the fact that we're seeing that target shifted. There's certainly going to be a perception that South Africa is getting more towards the international norms. You'll see many of the major central banks out there with their targets more around the 2 to the 3 mark. So the idea that South Africa is back in that same kind of area plays into the same story, really. I mean, look, what we have seen is a strengthening of the South African rand of late. And so the weakness that we've seen in terms of the US dollar in particular means that you do sort of import disinflation rather than importing inflation. So that has to some extent helped lessen the inflation burden seen within South Africa of late.
Let's now look at what's playing out in the U.S. Sentiment has been shaky over the past week or so, but markets seem to be stabilizing into the new week as we await numbers from NVIDIA. Really a big test, especially at a time where we have concerns around AI valuations. Just your thoughts as we head into this new week and how markets are likely to perform as we await those key figures, those key results from NVIDIA.
I think it's an absolutely massive week, quite frankly. I think if you're looking at the market environment right now where people are talking about an AI bubble that's about to pop, there's question marks on whether we're peaking out now and we can suddenly see a collapse. And certainly the sheer size of NVIDIA means that if they come out with earnings there, anything other than perfect, I think is the kind of thing people are going to jump on, and we could see some significant volatility. So yes, we do have other notable reports this week. Of course, we've got the jobs report on Thursday out of the US for September. But I think NVIDIA really is the key to the whole week. As long as we see a great report from them, then okay, fine, things are relatively stable. But if we don't, then things could start to turn sour quite quickly.
I mean, NVIDIA's valued at around $5 trillion. And I've always thought to myself that investors are a bit too hard on NVIDIA. You might find, double-digit growth, but investors were expecting triple-digit growth in profits. What's your reading on that, and I guess expectations from NVIDIA?
I think, this is the difficulty, right? Because it's the curse of the big numbers. I mean, you can post triple-digit gains, but once you're valued at near 5 trillion, it's going to be very difficult for you to post those same kind of numbers. Now, coming into this year, there was an expectation that we were going to see an easing off in terms of the growth rates for the Mag 7 names in terms of earnings, and a major pickup in terms of the growth rates for the rest of the market, the 493 essentially. Well, we haven't seen that for the 493. We've seen for some, but we have seen that sort of tailing off a little bit in terms of the growth rate for the Mag 7 names. Yeah. So it's always going to be difficult for them to maintain those levels. Thus far, we haven't necessarily seen markets punish these stocks for the fact that their growth rates aren't necessarily as they were at their peak, particularly Nvidia. And so that's the question mark, you know, do we see markets suddenly start to turn around and say, well, actually, you're clearly slowing in terms of the growth, even if you do beat expectations, and therefore you see the stock getting hit, even if they do beat on the top line and the bottom line.
And quickly, before I let you go, what are your expectations when it comes to those Fed minutes also out this week? I mean, we had Fed Chair Jerome Powell warn that a December rate cut is not given. But on the other side, the labor market is softening. Yes, ADP numbers from the previous month showed that, you know, the gains were not as low as markets had expected. But we also still have some of the official figures coming out this week.
Yeah, I mean, look, the takeaway from that Fed meeting was that December wasn't a given, and certainly markets have run with that because we were pricing in a 95% chance of a rate cut in December. Now markets have it as 45, so it's now the base case scenario that we don't see a cut in December. So we're probably going to get a little bit more of that narrative from the minutes. I mean, ultimately, we've been hearing from a number of different Fed members since, and all of them pretty much have been saying, well, apart from Stephen Mirren, have been saying, maybe we take a cautious approach. Inflation's still a concern. We don't necessarily need to have another insurance cut in December. So certainly the comments we've seen since already tell us the story. And from here on in, it really comes down to the data. We get data for September, but we probably won't see it for October. And that probably makes it even less likely that the Fed cuts. Yeah,
we'll wait and see. And we're waiting in anticipation, of course. Joshua, thanks so much for your time and just taking us through the economic week ahead. Now, that was Joshua Mahony, Chief Market Analyst from Scope Markets, with the Global Economic Week ahead.